It was payday the other day, so I thought I could share my payslip with you guys and kind of walk you through some of the main things that you should really pay attention to when you receive your payslip. Because don't forget, even though your employer will, most likely get things right, it is ultimately your responsibility to make sure that everything is correct, that all the details that are in there are the correct ones, and that you're getting the money that you deserve because you worked so hard for this, and you shouldn't be missing any money that you've earned and deserved. Now, disclaimer: this is a UK payslip. I appreciate that different countries will have different payslips, so take this with a pinch of salt. Do make sure that you're cross-checking for your country's regulations and rules and tax codes and all of that jazz. My payslips are actually pretty simple in the sense that I've compared this, for example, with my mum's pay slips in Italy, and hers are much more intricate and they have many more entries to them and deductions, etc. It seems like the UK ones, as far as I know and I have experienced, are pretty straightforward, which I appreciate. But still, I think worthwhile kind of going through it and studying it together and kind of pointing out a few things that I think are most important. Now, I have blurred the numbers just for, an added layer of kind of like privacy. Appreciate I'm sharing a lot here already, but I don't think that the numbers necessarily are the most important part of this video, but more kind of like the individual things included. So without further ado, let's get started. I will be sharing my screen and walk you through in a second. So here we have my payslip. One thing that I have not included, but that would be at the top, so above the gross pay and deduction and adjustments sections, is the your tax code, which is normally next to your national insurance number. That's why I'm not including it, because of course the national insurance number is extremely confidential. But your tax code is probably the first thing that you want to make sure that you are getting right. And normally in the UK, in the vast majority of cases, your tax code will be 1257L. What that means is that the first £12,570 that you're earning in a fiscal year are tax-free, basically, and that's your personal allowance, as it's called. Now, again, in most cases, that would be your tax code, and so make sure that you have those four numbers and L at the end on your payslip, because you don't want to be missing out on some hundreds of dollars or pounds rather, that you can get tax free. The tax code normally changes once you surpass a certain limit, which is £100,000. And that's when you start of taxable income, and that's when you start losing your portions of your personal allowance, basically. But for now, let's speak about the more general scenario, which is the 1257L. So remember that number. Then, if we go into the actual the actual pay slip, what you see is, of course, we start off with salary, right? And here, of course, you have basically just like super basic math. If your salary is 100K, you have 100K divided by 12, and so that's the number that you will have here. So this is all pre-tax. Then here, what I have is SALSAC. SALSAC stands for salary sacrifice. So it's basically money that your employer takes before any tax is applied to your salary. And it can be for different things, right? Some companies even offer like cycle to work schemes that can go through salary sacrifice. Some other companies offer private medical insurance, gym membership, which is in my case, for example. And most companies will offer your pension contribution. It's also as salary sacrifice, which I would always recommend, and it's the one that improves, that is the most beneficial, because again, it reduces your taxable income. So when HMRC comes in, is like, oh, okay, how much is Francesca earning? If you've already paid for a bunch of things, you already contributed to your pension before they get to see what your income is, then of course your tax that you pay on that will be lower as well. So as much as you can, make sure that you're salary sacrificing. Now, when it comes to the pension, that's a whole different thing. But normally in the UK, there is a minimum contribution of 8% of qualifying earnings for your pension. and your employer is forced to match at least 3% of your qualifying earnings for your pension. So that means that you, in that case, let's say if your employee matches 3, you have to contribute 5%. Now, in my company, they match 4%, up to 4%. So until now, I've always been doing just contributing also 4% to basically max out the match from my employer. And this is my I guess second recommendation at this point, or third. We've had a few already, but always make sure that you are maxing the contribution of your employer. So contribute yourself to your pension up to the maximum that your employer will match, because you're getting all the free money that you can, basically. Now, as of this year, I've actually started contributing more of that because I've gotten a promotion, and so my income, I'm basically trying to stay below that 100K threshold that we talked about to preserve my personal allowance. And so it's super interesting, actually, because I've contributed, in this case, 16% of my qualifying earnings, which in net pay always only equals to £100 less that I receive in my paycheck. But in terms of my pension contribution, that's actually 250 or £300 more that I'm contributing towards my pension. So that really gives you a sense of the importance of pre-tax earnings. And yeah, so I'll continue doing that. And then here I'm lucky enough that my company offers also gym membership that you can pay through salary sacrifice. So that's another thing that for me it's a no-brainer. I would pay regardless for a gym membership, right? Because I want to go to the gym. So if I can do that before I get any taxes applied to it, and it also decreases my taxable income, then it's a win-win situation. So this is all your incomes, right? So your gross pay, what you've earned. And then on the right here, we find the deductions and adjustments. So this is the less fun part. This is all the stuff that HMRC will take away, or other bodies will take away from you. So you have your pay as you earn tax bracket here, and so this will change throughout the course of the fiscal year, because the UK has a scattered taxable system, which means that your money gets taxed in different percentages as the year progresses. So you will start, remember we talked about the first 12,570, this is tax-free. So that one, actually, you don't get any taxes on. And then next, I don't remember exactly, I can look it up and I'll insert it. But basically, the next range is 20%. And then let's say from 45, again, I need to double check the numbers, but from 45 to X amount is taxed at 40%. And then you have the upper bracket, which is 45% or so. So this is an incremental tax system. That's what you'll see here. And this is the biggest chunk of money that is taken away from your salary. Then you have national insurance. Again, this is from the UK government, taken away from that as a portion of your salary as well. And then finally, student loan. Now, I studied in the UK. I did my bachelor's in Manchester. So to do that, I took a loan with student finance back in the day, and I'm still repaying that. Now, I'm really a fan, actually, of student finance and how they structure their loan. Some people don't even see it as debt per se, but more like an extra tax, almost like a study tax that you have. I don't know if I would see it as a tax per se, but I like how it's a very light loan, in terms of you only start repaying it once you earn above a certain threshold, which I think is now £30,000. I might be wrong, but it's £30,000 or around that benchmark. And it's also proportional to how much you're earning. So the more you earn, the more you pay, which is fair enough. But also, when you are just starting out, your loan repayments will be much, much less. So when I started, I think I was on 37K, I think, at a time 5 years ago, and I was paying around probably like £70 a month, which was really like not much, but of course proportional to my pay at the time. And then as I've started earning more, I'm now basically £500 that I'm paying every month. But that also means that I should be done repaying that loan by end of this year, actually, which is very good. I can't wait to be done with that and enjoy more of my money as a result. So hopefully this was useful insights. I will do a separate video on how I then split the money that I have, and kind of like a financial reset, kind of my routine for going through what I've spent and how I think about the next month ahead and how I want to spend the money that I've just walked you through. But hopefully this was helpful. And if you have any questions, do let me know. I'll include those details that I could remember top of mind, top of my head, with you in a second. And always remember, do your research, look into the numbers that you should be getting, and if you spot any inaccuracies, do flag them, because I mean HMRC has to deal with millions and millions of taxpayers, right? So if you don't fight for your rights, and if you don't fight for what is right, then yeah, you will lose out, and you kind of have to take that ownership. And hopefully this video has empowered you to do so, and given you some tools to how to think about it. I'll see you next time. Bye.